There's a growing narrative against Lucid Group, the firm behind the ultra-luxury Air electric automobile. Investors are being told that the business is doomed. They're becoming frightened, apprehensive, and doubtful about the Californian startup. When the company reported that it was the subject of an SEC investigation, the effort to generate fear gained attention. Recently, more news about the issue of convertible notes cemented that position. The situation reached a climax when Peter Rawlinson, the CEO and CTO of Lucid Group, announced the liquidation of his company shares. Let's take a look at these events sequentially and then combine them to determine if they're bullish or bearish in nature. Welcome back to New Vehicle Media, your go-to channel for EV stock. A quick reminder that subscribing is free and liking the video will help YouTube suggest similar content. Comments are loved and featured in our upcoming videos. A record amount of stock is being disposed of by company founders and top execs. As a result of the surging market prices, some company owners are selling shares in their companies for the first time in years. All that in advance of future changes in federal and state tax regulations in the US and several other countries. The selling of shares has resulted in more than $200 million in earnings for 48 senior executives so far this year. This figure is approximately 4 times the average number of insiders between 2016 and 2020, because insiders are the company's highest-ranking personnel, or, in other words, top executives. When they purchase or sell shares, it generally catches the attention of investors. If the CEO purchases stock, the market interprets this as a positive signal, saying that the stock is cheap, while selling shares is seen as a negative signal, implying that the stock of a particular firm is overpriced. Despite popular belief, this is not always true. For some, it's because of the obligations that are required to be offset. LCID stock has suffered a significant knock in recent weeks. First and foremost, as previously stated in our videos, Lucid Group was served with a subpoena for more documents in connection with an SEC inquiry. While the particular nature of this inquiry has not been published, it's believed to have been conducted during the time leading up to the SPAC, CCIV's plan to go public with the American EV automaker. As a result of a few cases brought against the SPAC, a key focus of the SEC's investigation is anticipated to be Lucid Group's failure to fulfill some of its pre-merger pledges. In particular, it has failed to begin deliveries of the Air electric vehicle by the spring of 2021 and has fallen short of its full-year delivery goal, which fell from 6,000 units early this year to only 520 units now. The unfavorable news that made headlines had a significant impact on the stock's performance. However, this was not the only negative indication that caused LCID to decrease in performance. The CEO of Lucid, Peter Rawlinson, selling off a portion of his company's stock has also eroded investor confidence. Let's take apart the story that has been spun around Mr. Rawlinson's newly revealed stock liquidation. The SEC document Form 4 has confirmed that Rawlinson has sold 466,749 shares of its EV business, generating income of $29,751,000 as a result of the transaction. The misinformation argument has zeroed in on the timing of this transaction, which occurred just before the SEC investigation's public announcement. In actuality, this transaction had been planned for many months in advance. A Form 10-Q filed by the corporation reveals that the time-based restricted stock units held by Peter Rawlinson will be vested over a period of 16 quarterly payments commencing on the 5th of December in 2021. As a result, the investors were confused by yet another wrong indicator. The sale of Rawlinson stock is expected to satisfy the company's tax liabilities connected to options that have already become exercisable. This has absolutely nothing to do with the SEC inquiry, and any overlap in this respect was entirely accidental. However, this isn't the first time a CEO has sold up their stake in the company. This has always been a part of the corporate world since its inception. Elon Musk, the world's wealthiest person, has recently sold his Tesla stock for more than $1 billion. Microsoft CEO Satya Nadella sold off half of his stake in the software company in early December. In a statement released recently, AMC Entertainment CEO Adam Aron said that he has sold 625,000 shares of the company's stock as part of a strategy to reduce his personal holdings. Employee insider transactions are on the rise, and Peter Rawlinson's purchase is the most recent in a string of high-profile transactions. Because of the worldwide chip scarcity and accompanying supply chain constraints that have been a characteristic of the sector for the most of this year, critics claim that Lucid Group's inability to reach its more aggressive delivery objectives is a cause for concern. Particularly challenging is the issue of blooming on complex production lines. In case of subpoena, the worst-case scenario for Lucid Group is that it'll be fined by the SEC, but there is little danger of a disaster, as the analysts assert confidently. Small and mid-cap growth companies, for example, have seen a recent correction despite the fact that the main stock market indices have been hovering around record highs for most of 2021. Some individual growth stocks have fallen by more than 50% from their highs. Yet, several stocks have continued to thrive with a gain of around 50% over the last year. In recent weeks, it seems that investors have shifted their attention away from smaller, more volatile firms and towards bigger, more established ones. Entrepreneurial startups may undoubtedly bring excitement for investors. Startup businesses, such as EVs, are becoming valued higher as more investors seek confidence in these equities. This industry's price-to-earnings ratio has typically been between 20 and 25 during the last decade. Perhaps the company's faster growth might support a greater value, or anything else that would inspire shareholders to agree to pay higher prices for its stock. It's a possibility in Lucid's situation since it has a road strip to take advantage of in the event of a crash. The sale of some or all of a company's interests by the CEO is quite acceptable, and these are personal choices that each individual must make for themselves. It's a good warning to EV shareholders that the stock is costly and that the firms may be becoming too massive to overcome such a high valuation. But I'm interested in hearing your thoughts on the current state of LCID. Does it seem to you that investors who are simply interested in short-term profits are the ones who are riding Lucid stock more than others? Do you believe that investors overreacted as a result of a series of news stories that weren't backed up by authoritative statements? Let us know what you think by leaving a comment down below. Mr. Rusko seems to be in complete ease of the LCID issue. He sarcastically requests of all LCID traders who are panicked as a result of the SEC subpoena that they do themselves a favor today and ease themselves of their stress by selling all their stock positions. He says that there are many, including himself, who are eager to take advantage of the low prices offered by your stocks. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.